Dustin Tibbetts here, financial advisor with Jazz Wealth Manager, the 36th best financial advisor in all of the United States, thanks to USA Today. We're finishing up our barefaced Canadian whiskey here. And yeah, like I said, it's growing on me. Last couple nights I've had it. Well, actually, the last like 4 or 5 nights. I like it. But again, I would not make it in an old fashioned. What the hell is the Fed going to do? Right? Are they going to cut rates here in this next meeting? Let's talk about it. The Fed, I don't think they know what they want to do, to be honest. Like so many of the things they said, and I was going to put this all together and show each comment from each person, but you might think that's boring. Let's dive into what they're doing here. I was trying to summarize all their comments and put it into a visual way so you guys get a feel for what they're trying to do here. Most of them, the voting members anyways, say, we'd like to just see what happens. We don't know current government policy really around tariffs. So we think we should wait. We don't know the impact. Tariff concerns, they're like, yeah, I mean, what are we doing? Is there going to be a tariff or we're going to deal? You know, what's happening? They also fear that these tariffs are going to cause inflation. We'll go over that in a second. Their mandate, remember the Fed's mandate to maintain inflation around 2% is also pretty high as well because they worry that tariffs are going to cause inflation. So what do? We don't want to cut rates into that. We may want to hold rates steady. So there's a real balancing act there. And the economic uncertainty really revolving around tariffs is, of course, one of their considerations as well. Mr. Jerome Powell, who runs the Fed, he is the president. He says, hey, for the time being, we're all positioned to wait for greater clarity before considering any adjustments. This was just a couple weeks ago, right? So now, here's what we have. Yeah, you could see it. We have current rates are 4.25 to 4.5, right? So the probability in May that it goes to 4%, so basically a quarter-point rate cut, is next to nothing. Essentially, the Fed is very likely this month to just leave rates and probably say we're going to sit back and wait. To get below 4%, these are the current odds that we'll do this in the given month they're going to do it, right? So in other words, rate cuts are being pushed out into the future because we don't know what is going on, right? I'm with the Fed on this one. Okay, if you're going to, is it 100% tariff, 124, 104% tariff? What is it that we're doing here? And who sells the product that's going to ship it over here? Is it China? Is it Taiwan? Is it India? What's happening? So there's all this concern where we're trying to figure out what to do, and the Fed's doing the same exact thing. Another way to look at this is we are here, right? So I'm going to just hold my mouse over this. So here we are here, 4.25 to 4.5. In the May expiration, what's the probability that we stay at this number? 87%. In the May expiration, in the May rate decision, the Fed meeting, what's the probability we get a quarter-point cut? It's only 13%. In other words, people have basically locked in the fact that the Fed doesn't know what they want to do. Let's leave everything as it is. If you're hoping for a rate cut, the odds are stacked against you. A half-point rate cut almost doesn't exist. Whereas in February, before this sort of tariff frustration began, we all believed that rates were going to be cut and then cut. That's changed. That's just not going to happen. So to give you an idea of what's going on there. Looking at some of the details around the voting members who have made comments over tariffs there, they're looking at tariffs as not a long-term weight on the consumer. They're looking at it as, okay, once we get some clarity over whatever deals have been made with Canada, Mexico, and Taiwan, whatever, that it would be a one-time adjustment, meaning the, not consumers, the developers of products and services, the actual producers of shoes and whatever, Nike, whatever, they would be able to now go, okay, well, that's the tariff, so our price needs to be here. It would be a one-time inflationary price adjustment to the consumer. And so they're like, okay, well, once we know that, we can decide what level of inflation that may cause on the consumer, and maybe we'll leave rates for the next 2 cycles and then cut after that. We do not want to see them cut rates too fast into higher prices. That'll just further drive inflation, right? Anyways, so that's that one there. Now, the adjustment to the projected inflation rate now includes what? The tariff adjustment, right? So I put the tariff effect on there, but we now have this impact that inflation is expected to go up a couple percent not inflation rate, but the rate will change by a couple percent because of these tariffs. It also is suspected that, well, okay, if prices go up, that means people will buy less because they, issues, right? I'm not going to spend more on that. And so the overall growth of the economy could slow a little bit. And that's the tariff effect that people are looking at, which started in April and is now going forward, that should play out through the summer. So really, really tricky with the Fed trying to balance this one here. I'm not jealous that I'm not in that position because that's a really tough one there. So basically the Fed's saying, we're going to be a little bit patient. Okay, we don't need to cut rates now because if we cut rates into a higher inflationary environment, we're just creating that same problem we had before, and we don't want that problem. Therefore, they're saying the timing of our rate cuts will probably be in the future. I suspect in May, they're going to reiterate that comment as well, saying we're just going to have to push this out until we know what's going on, despite the president saying, hey, Powell, cut rates. Also, keep in mind, last thing I'll point out, if you're a Trump fan, then you don't care. If you're not a Trump fan and you're going, that's rude of him to be asking an supposed independent organization to be cutting rates, the president shouldn't have that power. Remember Volcker, right? Or Volcker, I should say. You remember that back in the day? There were not only the president, but numerous high-ranking politicians that were pushing him to do the same thing aggressively, so much so that a guy came to assassinate the guy, right? He was arrested. It didn't work out. But this is nothing new. But if you watch one TV channel, they'll go, how stupid is he for doing this? If you watch the other channel, they're going to go, well, this is nothing new, right? It is nothing new. It's actually a part of a political push that has been used in the past. I don't want them to cut rates this time as much as I want to see lower interest rates, right? Everybody does. I don't want them to cut because I'm worried about inflation as well. I don't want the growth of our economy to slow down because we got these higher tariffs, right? And they cut rates and like, what are we doing, right? So I kind of am on the Fed side here. I'd be absolutely shocked if they cut rates in May. So it gives you a little idea of what to expect. Agree or disagree? It's okay if you disagree. That's just my point of view. I was just sharing the data with you there. If you disagree, let me know down below. If you think this thing is just going to hell in a handbasket, of course, let me know as well. I have fun talking about it because, there's no wrong answer. Like this is like debating if the Cowboys are going to beat the Giants. Like, we don't know. We're just along for the ride. And the Cowboys usually lose, sadly. But okay, hope you learned something. jazzwealth.com. Hope you'd like to work with an advisor that's always on top of this stuff. This is what we do. And you can look on our website, see exactly how we work, what we charge, and who we are. Have a great rest of your evening, and thank you for watching. Adios.